Well, hello, traders. This is Blake Morrow, and you are listening to the F.A.C.E webinar right now. And Dale is not here. Excuse me, really quick. Let me go ahead and hit that. Okay. Dale's not here right now. His computer has had issues since Friday, and I think he's getting a new operating system put on or something. I'm not too sure. Unfortunately, he is not a tech savvy person. For the most part, so he has been seeking help, and we'll get him up and going as soon as possible. I hope you guys and gals have had a great weekend, and as you can see right here, stocks are just absolutely getting crushed. Let me go ahead and pull this up here a little bit so we can see this data. You can see that the equity markets, let's pull it up really quick, and I think this is really important to note. We are well below the 200-day moving average. Actually, if you take a look at what the S&P did and is doing, we're well below channel support. We're below the 200-day moving average. Even the rally today up towards the 200-day moving average found sellers. So I mean, it's just been a rough ride for equities all the way around. You take a look at the NASDAQ. NASDAQ has completed its double top. That's something that we should consider. And there's another thing I wanted to show you here with the NASDAQ that it's been on my screen, but I want to make sure that you guys see it as well. For those of you that trade the NASDAQ. So if you notice, we have this, we've been looking for this double top to complete forever. And it actually just finally completed as of today. So this morning. Now, notice this lower trend line. This is something that I drew out for the ForexAnalytix folks a while back. And, it's a trend line, but it's a descending trend line, right? So it's deceiving because when you go, oh, it's like you saw over here. Let's move this over. You saw over here, you go, oh my God, look, we hit new lows, right? And then we bounce once we hit new lows, right? So the NASDAQ, very similar situation right now, as we're sitting at, fresh lows, horizontal support is broken. And how many people, and this is where it gets a little risky, because how many people will get sucked in shorting right here, especially ahead of a really critical week. This is, obviously the FOMC. No one's expecting the Fed to actually move on rates. Well, that's not necessarily true, but the majority of the market does not expect the Fed to move this month, and we can talk about that here in a little bit. But the fact of the matter is knowing that we're going to be talking about withdrawal of liquidity at the Fed or from the Fed this week, and kind of setting the pace to how hawkish or less hawkish or more hawkish than the market expects going into this next week or going into the next few months. This is going to be a really important meeting from the Fed. So the reason why I bring all this up is because chasing markets lower at this stage in the game is a little dangerous, in my opinion. Now, you also notice the Dow nearing the 127% extension of this last move. And, again, we're cracking some levels, pretty key levels, new lows in the NASDAQ, the S&P, but the Dow continues to hold up as you get a little bit of how should I say, a little diversification into different parts of the markets, and some of the bigger names are attracting some capital at this point. I also have to point out cryptocurrencies, and I want to talk a little bit about them, and then I'm going to bring in the rest of the team and see what everybody else is up to. Hold on one second. And like I said, we're missing Dale this morning. We got a couple other guys that are in right now, but Steve and Stelios, not sure where those guys are at this morning because it is.
Good morning, I'm here.
Oh, you are here.
I'm
okay.
buried in snow, but I'm here.
Yeah, you guys have snow. Okay. Well, hold on. Hold your thoughts really quick before we go into. I wanted to show everybody the crypto market. So we've got Bitcoin just absolutely getting destroyed here. And we're approaching, this is like the kind of really key levels that I'm really, really concerned about going into into this fall. Is we're coming into the 618 retracement. And I said this in the week ahead video, that the introduction I did for Grega, by the way, and which I hopefully you guys really enjoyed that week ahead video this week. We have the 618 retracement, and then this is like, my opinion is there's this big open gap right here. This is like the elevator shaft where it kind of opens up somewhere between the 28,000 and the 20,000 level, but big potential move lower. I mean, look at Ethereum's down 14% today. We're cracking through channel support, and hell, I mean, I start looking at these things and going, okay, well, where can we go here? I mean, Ethereum could very easily see $1,000 again. You see Bitcoin, down at, 20K, who knows? I mean, I don't know if I would, if I would be, I guess the attraction or the draw for a lot of people down here is I want to start buying down here because, you got everybody panic stricken about, the crypto is taking a huge hit, and which it has. I mean, you think about like, let's go to Bitcoin really quick and let's look since just Christmas holiday, which was literally a month ago, right? So from the Christmas holiday, Bitcoin has lost 35% of its value just since
store of value.
Yeah, total store of value. I mean, 100%. So I mean, that's quite a shakeup, and that's something that we have to be really, really cognizant of. That there's just there's just a major move lower, and not only risk appetite and stocks and what you're seeing in the stock market, but also in this big move in cryptocurrencies, which I think is the ultimate. And it still remains like the ultimate, risk on type of vehicle. And until we start to see some stabilization there, I think you have to sell rallies. And I want to go back to the S&P really quick, because I do think that the S&P has broken some major support. And now we have to look at, this is, my previous support zone. Now it's a resistance zone. And you have to see that previous support right here that comes in at beginning of December. Sorry guys, just getting over COVID. So I still have the yawns because I'm like still, I actually, my body's still kind of, trying to shake everything off. Anyway, any rally back to 4,500 should find sellers now in the S&P. Now I know we're at 4360, but I do feel we're a little oversold. I don't think that you should be chasing the markets lower at this time with the Fed coming up at midweek. So let me ask you guys this. Well, first of all, good morning, Stelios. How are you? How's the snow?
We haven't seen anything like this in decades. I spent like half an hour clearing out snow from trees and various parts of the garden and house. But anyway, it's all good.
It's awesome.
Yeah, the 2 or 3 days of school from home for the kids.
Your trees?
Sorry?
You clear your trees?
Yeah, otherwise they're going to fall from the weight. Basically,
yeah,
okay.
Yeah.
Anyway,
that makes sense. That same thing happens with us here. I mean, because I know Athens is a fairly like hot and dry climate. I mean, I know you guys have some rain, but yeah, that will happen.
Yeah, it's okay. It happens. But yeah, all good. I mean, I'm looking at the markets today, and you mentioned a few things. Stocks remain weak. Cryptos, I just want to say something very quickly about cryptos. We all, I mentioned this in the chat room and here as well on Friday. We all know there's, we broke down 40K. As soon as we broke down 40K on Bitcoin, that was it. And I said, look, I think the next level is really 30K, 30 to 32K, which is basically Michael Saylor's average. Everybody knows it. He wrote on Twitter in December, I think he's got nearly 4 billion of Bitcoin. And anyway, that's going to be a big level. It's probably going to be defended very heavily. So, if anybody wants to play a counter trend long it's probably a good place to do it, but I fear for these guys because really everything I read is, this is just getting cheaper and it's going to be a lot higher in 5 years' time. And people looking at 10-year charts. Yes, but look at 10-year performance of gold against Bitcoin. Bitcoin's up, 300,000%. Well, who was in long from 10 years ago? If you were, well done. But, I doubt all these people have been in this from 10 or 7 or 8 years ago. But anyway, we look at price action today, and price action today is still very bearish. I think we'll probably get a bounce from around 30 to 32K, that zone. But really, I wouldn't want to get in the way at the moment. Same with stocks. I wouldn't want to get in the way of stocks at the moment either. The big question is what's going to happen on, is it Thursday, the FOMC?
Wednesday,
sorry.
Yeah.
No, Thursday is the Bank of England usually, yes. So Wednesday, what happens on Wednesday? Because we're seeing this move lower in equities and yields really have not broken out. Yes, we're at 172, 3, whatever it is on 10 years, but yields have not broken out. So the Fed, they will know that if they start hiking and tightening according to their schedule, I think the yields are going to go. And if they see this price action now without yields going, they can only imagine what's going to happen afterwards. And I think we all know the Fed does not want an equity market crash. So what are they going to do on Wednesday? Are they going to backtrack a little bit? Are they going to be slightly dovish, just a little bit? I think there's a chance of that. The market's pricing nothing. I think it's January, February Fed funds is something like half a basis point, which basically means flat. So the market's pricing nothing for them. They're not going to hike this month. I don't think they're crazy to do that. But I think the risk is now starting for them to kind of start giving us a few dovish tones. And then we see where we go.
You think so? Really? You think, because, the market is obviously pricing in a very aggressive Fed right now. So you think they're going to try to backtrack a little bit, down a little bit?
They shouldn't, really. They shouldn't. They should just carry on with their schedule and do what needs to be done. But we all know they're very sensitive to equity movements. And look, the S&P is down, 13% from the top? So
let's see, we are down right now. Well, no, the S&P is down 10%.
Oh, 10%. Okay, the NASDAQ is down more. Anyway.
Yeah, the NASDAQ's a different story. Yeah.
They're watching this. You can bet they're watching this. And I just have this fear. Really, they shouldn't deviate from what they've told us and what they should be doing, because really they should be doing this. But what's going to happen? I don't know is the answer, and I think the risk is increasing for them to just drop a few dovish hints. That's my view. I could be wrong.
Good morning, guys.
Hello.
Hey, good morning, Steve.
I think we all said since the end of last year that this is going to be a very interesting year, right? And an increase in volatility was inescapable. The reasons are more than obvious, right? You can have the same type of monetary policy that has been acting as a tailwind for equities, reversing, and then nothing happening. Now, the big issue here is, as Stelios said, that no matter what is happening with equities at the moment, inflation remains extremely high. So can the Fed get more dovish, less, let's say, less hawkish in the path forward? Yes, they can, but still, can they actually, cancel just because we've had a corrective move lower, their plans? I don't think they can. So even if they soften up a little bit, which, yes, I agree with Stelios, and I've said since last year that I believe that at some point this year the Fed is going to do a 180 once again, but I don't think so soon. So I think the risks are clearly tilted for more downside in equities for the time being. And needless to say, we've said a billion times, right? There are no riskier assets than cryptocurrencies. You can't expect cryptos to perform while everything else is crashing, right? And there are a lot of people that are investing in cryptos, and many of them have been making money, and good for them. And they are vehicles of volatility, which means that, it's great for trading and making money. But if your thesis has been, or, you intended to be, that cryptos are like store of value and, this is the way to hedge for any kind of abnormal condition. I don't know how many times you have to be taught the same lesson to, stop thinking of them like that. These are my brief comments.
The thing is I still believe, and this is where I differ from you. I actually believe that cryptocurrencies will be bought and they will be used as a store of value at some point. I don't know if right now is the current price where you want to be long, especially if and I still think that Bitcoin could see very easily below 30,000, as we said just a little while ago, or as I said just a little while ago. And I think Ethereum could get back to $1,000 pretty easily. But there are going to be places where I think that you want to have exposure to these. But in the current environment, with stocks coming down, this is going to be where the pressure comes from. And then until you start to see pressure coming off of these cryptocurrencies, as I mentioned, when we first started this webinar, F.A.C.E just a little bit ago, this is where you got to see these stabilize first, before you can see stabilization in any other assets, in my opinion. Now I see that Ryan and K-Man have come in too. Good morning, guys. How are you?
Morning.
So Ryan, what's your take right now on the markets that we're seeing? This nice slide in equities and risk off ahead of the Fed. What do you got? What do you think we need to be looking for going into this week?
Well, obviously the Fed's the big picture. What we're seeing today is the dollar really picking up a bit of a head of steam in pretty much everything bar versus the yen. Yields are looking a bit stable. They're trying to hold that 170 mark in tens. For FX itself, we've got one of those situations where now, 1 minute we're looking at the high side in dollar pairs, and now we're looking at the low side. Things like euro cables, falling out of bed, Kiwi's broken key level at 67, Aussie dollars looking a bit worse for wear. I know K-Man will probably touch on this a bit more, so I won't go too much into it. But it's this week is also slated to be potentially a heavy US dollar buyer for the month end. Maybe a bit early to start seeing that now and use that as an excuse, but it might be a factor within there. It's pretty strange to see such strong moves on an FOMC week, but I think we're having one of those times where there's so much news around, the market sell-off in stocks, market sell-off in Bitcoin, the geopolitics throwing up in the middle of all this central bank stuff. Sometimes when you get so much negative news and negative market impacts happening all at once, the easy option is for people to press the sell button. And, if particularly people in the US, if they're getting done on stocks and they were holding profits in Bitcoin, they're going to start getting out of that as the price tumbles, and it can have a cascade effects where, it's last one to the exit door is a loser.
Yeah, right.
So, it's a funny day. It's Monday. I'm never the best on the Mondays in the best of times. So it's looking a bit messy at the moment, and we'll see how it all straightens out.
All right. K-Man, good morning. How are you?
Here I am. Good morning, everybody. Just on crypto, is it a store of value or a store me value? I think it's the latter. Well, yeah, as Ryan was saying, it's risk off. It's dollar buying. Yeah, the end of month is maybe a little early, but then we have seen in the past year and a half, there's this system which they call Siren, and who is doing much more dynamic hedging than before, waiting for the last 2-3 days of the month to do the whole end of month. So we might already be seeing parts of it being traded. But anyway, yes, the models should show a huge dollar buying signal for the month end. Seen that specifically S&P is the biggest weight in those models. S&P lost about 8% since the start of the year. For the rest, the dollar yen does seem to find a few bids again around this 113.40.50. Where when all crosses were selling off, all of a sudden dollar yen caught a bit there after touching 113.5. So that's going to be the level to watch in the immediate neighborhood. And for the rest, I think it's just like Aussie, Kiwi looking weak, Canada looking weaker. All those risky currencies, just like sterling as well. So that's basically it. The Fed won't do anything. I think Stelios might have a point in saying Powell may come out and say, okay, listen, guys, we have not even started yet, and you're already pricing in all that we should do at the end of the line. So maybe there's going to be a little bit of a comment in regards to the market expectations of what the Fed may be about to start. And I was looking at the S&P. If you look back at May, June last year, when the Fed really had the start of the change in tone that I called then, I said, watch out, this they're starting now. It's part of a playbook. They're starting now to change in tone. The S&P was about what, 4150, 4200, somewhere around there.
Yeah, right. Yeah, around 4250 or so.
We're still above it. So I don't think it's going to be a major factor for the Fed to see S&P right here and now correct. So but start to trade below 4200, 4150, they might change tone again. That's my opinion. But they might.
Cayman, I think the moment the Fed changes tone this year, and I do think that eventually it's going to happen. I'm just not sure it's going to happen so early.
No, but
I think it's going to be the signal
here and there. Huh? It's been like a really process. It's been a process of changing from being dovish and saying behind the curve, and then they started May, June last year. It's all part of a playbook, right?
Yeah, absolutely. I think the moment they actually, in an obvious way, start to shift, it's going to be the moment in time when we're going to see metals starting the next leg higher.
Absolutely, I agree.
I think that's going to be the signal.
Powell has been pretty okay in walking the fine lines during interviews and everything. So when they started to change tone in May, June last year, stocks didn't really pay attention because there was still so much money flowing through the system.
Yeah.
And they are still not at the end of QE either. We have another month or two to go, right?
Yes.
So they can. I think it's going to be very, very light if they change anything. But the possibility, I agree with Stelios, that the possibility at least to just change a few words is there.
I think you're right. I think it's not a question of picking up the pieces of the stock market. I think it's that expectations have gone so far. I mean, who is it? JP Morgan calling for 8 hikes?
I mean, 6 or 7, but Goldman is the same. This is from March. They are going to hike every meeting, which is 6 or 7 hikes.
Yeah, I mean, that sort of stuff is pie in the sky stuff, and that's what I think he'll try and rein in. I don't think he personally cares, like you say, whether the stock market has lost 8% in this year. What's it done for the last 10 years?
At the end of last year, from 4,600 to 4,800 in a space of a few days, right?
Exactly. But I also agree with Steve that there will be a shift eventually, but I don't think that's going to come until they've got some hikes under their belt, because purely they need some rate hike margin. I mean, if you look how we came out the last crisis, they had to get rates up. They did what the ECB failed to do and use that time to get rates up, purely to protect against the next time the shit hits the fan.
Yes,
that's one thing they're good at. They get the margin. They get their margin back. They want to get the balance sheet, knocked down. They want to get QE finished, get rates up. They want to put themselves in a position where when we have the next crisis, whatever it is, they've got the room to act. That's where they're going to shoot themselves in the foot, because if they don't get that margin, that monetary policy margin, then they're going to be in a rabbit hole like
Japan style.
Guys, if their intention is exactly what you just described, mate, which I agree that their intention is, their intention, what they would want to do is what you just described, Ryan. There's no question about it. Now, there's another question. Are they successful in it? The answer is absolutely not. How do we know that? Because every crisis begins with rates lower than the previous one, and we've now hit rock bottom, right? And every crisis demands bigger doses of QE than the previous one.
Yep. Agreed.
All right, guys. Oh, look, we got about 5 minutes before we have Colorado Travis on as our guest. So enough of the theoretical stuff. Give me what you guys think is a good trade going into today. What do you guys think? Let's go around the horn. Steve, what do you think?
I think for the time being, long dollar and equities and every risk asset like cryptos on the defensive should persist until something changes. So yeah, short term, if we're talking about it, I think, we should keep on the same direction as we've seen during the past several days.
Stelios?
Pretty much the same. I just want to be selling rallies in equities and risk assets in general. So I wrote on the chat room this morning, if we get the S&P was trading at 44, was it 4,400, something like that, and I said, look, if we get anywhere close to 44.50 or something like that, or near there, I think it's a really nice risk reward short. We didn't get there, unfortunately, but I want to be selling rallies.
All right, very good. Ryan, what are you thinking?
Yeah, I'm the same. I'm for the moment, I'm in the dollar buying camp. I shorted Kiwi along with K-Man at 97.6697 on the 67.00 break. Just going to try and ride that horse as far as it will go.
All right, and by the way, just regarding the dollar here, the euro is trying to hold that 113. It's trying, trying desperately. Just wanted to bring that up to everybody, just so you all know. And K-Man, what are you thinking this morning?
Yeah, I'm a little short Aussie. I'm a little short Kiwi. I'm a little long dollar rand. So I guess that says enough.
All right. Well, that does
About
say
the dollar
enough.
rand again. We were looking last week at this low 15s in dollar rand. It finally held. So I think it's encouraging for long dollar that perhaps the dollar rand is showing signs of finally starting to react to what's happening in equities and to the dollar in general. So as long as we hold the 15 line, I'm going to try to defend that position and see if we can make it back up somewhere into the mid 15s, perhaps.
All right. Very good. And I got asked about the WTI, and I am bearish crude as long as we stay below this breakout point, which is around 86. It is showing a little bit of signs of weakness. The problem is you got this geopolitical Russia-Ukraine situation that is obviously weighing on the minds of most of the people out there right now. So that's something that we all have to take into account with crude. And one of the things about crude is it could spike up at any moment, especially if that situation gets a little worsens. I want to remind everybody today is the last day of the New Year pricing for ForexAnalytix. I want to show you guys just real quick what it looks like, in our chat rooms. This is like our general chat room. That's all the chatting that is happening right now. Matter of fact, if you go over here, let's see. This is about where that's not even where I got up. Somewhere around here this morning. Anyway, you can see all the chatting that's been going on. Just in the general chat room. Then there's like the trades room, trades that are happening. The macro Forex flow live room that's been happening over here. All of our news and research. People like to post, different videos they've seen and different pieces of news that they all see. Then we have a Spanish chat room as well. That's on top of our ForexAnalytix platform that you see right here, and mobile app that you can download for from Google Play or the iTunes store. So then you get all of your analysis of the markets here on 30 different instruments. Plus you have your live squawk, your news flow, risk management calculators, integrated calendars and Twitter and all that fun stuff. So there's so much here. So take advantage of that. I don't know any other platform that's going to give you that much, even with a mobile app and a community, for well less than $100 a month, especially with our pricing. So take advantage of it. And let me see. Richard said, YouTube people, these guys were a game changer for me. Thank you, Richard. That's really nice of you to say. Really appreciate that. Now we have, I think, Colorado Travis coming in. Since I've never talked to him. Can you guys help me out looking through? Steve, can you look through the attendees and see
Sure thing.
where Colorado Travis might be? DJ says the chat room is really where it's at. Besides F.A.C.E, of course. Thanks, DJ. That's awesome. I really appreciate that.
I don't see somebody with that name or any variation currently. So, if you're here, please type something in the chat so we can, perhaps he logged in with a different name or something.
An actual name. That would be
yeah.
Whoever Colorado Travis is. Let's see here. And like I said, Dale is out. So you guys have to excuse us as we kind of navigate through. Usually I don't do the
Dale has some computer issues, but we should be over with them today.
Yeah.
He had to take his computer to. Travis English. Okay, let me search with his last name. No, that name isn't here either.
Let's see here. Yeah, I don't see him.
Is there a chance that Dale notified him?
There's a chance. Well, Travis, if that's, let's see, I'm looking for Travis really quick. If Travis is here, we'll have to reschedule you because I don't see him here at this moment. So yeah, that's pretty much it. All right, guys. Well, hey, I want to thank everybody for being here today. Hopefully Dale will be back tomorrow, and if not, we'll still be here. So make sure you join us on the F.A.C.E webinar. For the rest of you all that are ForexAnalytix subscribers, I'll see you on the Morning Edge webinar, which comes up in about 45 minutes. So thanks everybody for tuning in. And you guys have a great one, and we will talk to you soon.
Thanks, Blake. Bye.
Thanks,
Cheers, guys.
Thanks, guys.